What's up, guys? Welcome back to another video. Thanks so much for tuning into Stock Essentials. My name is Alex, and today we're going to be going over a buy and hold strategy with just an initial investment of $22,000. And you can become a millionaire in just 40 years due to this ETF. So this is the Global X Funds, Global X NASDAQ 100 covered call ETF, ticker symbol QYLD. It's one of my favorite ETFs, and we're going to be showing you why. So this ETF tracks an index that holds the NASDAQ 100 stocks, and it sells covered call options against those stocks in order to create some monthly premium and some passive income. So this is done all behind the scenes. It's a way to get into selling option premiums without actually doing the selling of the options yourself, because the fund managers are going to be doing that. This is an actively managed ETF, so keep that in mind. So NASDAQ 100 stocks, we will get into the holdings in a bit, but if we take a look at the 1 year, we can see that this ETF is pretty stable. It doesn't really have big dips. From the low, it's around $20.69, and the high is around $23.47. So very low volatility ETF, and this ETF is designed to bring you monthly, because this is a monthly dividend paying ETF, monthly premium, which is very, very sweet. Take a look at the 5 year. It's very low volatility, so it's pretty safe for your portfolios. And this is one of my favorite ETFs, not only because it's very stable, but it pays out a hefty dividend yield of 12% per year. So this is actually going to be a little bit more than 12%. Because it's divided monthly, so it's going to be around 1% per month, and you're going to have that nice compounding effect if you reinvest your dividends. So we will go into the compound interest calculator in a bit and determine how much money you can make with $22,000, aka 1,000 shares of this ETF, buying and holding it over the course of around 40 years. So let's take a look. Why QYLD has high income potential. It seeks to generate income through covered call writing, which historically produces higher yields in periods of volatility. So very good time to sell covered calls. And if you don't want to do it, I know a lot of you are pretty confused with selling option premiums. This is a way to get into selling options without actually doing it yourself, because you're going to have a fund manager doing it for you. Another reason this is a great ETF is it has monthly distributions, as we mentioned earlier, and it has made monthly distributions for 7 consecutive years. And it has efficient options execution. It writes covered call options on the NASDAQ 100 index, saving investors a time and potential expense of doing so individually. So this is very good for people who are busy throughout the day, whether you have school, whether you just busy hanging out with friends, or you have work. So this is a buy and hold ETF, and it's designed to give you some nice passive income every single month, which is going to be pretty good for compounding. So dividend history, it has been paying out monthly for quite some time now, and as you can see, it pays out around 1% per month. So we can go into our calculator here. We're gonna do an initial balance of $22,680, which is going to be what the current stock price is, multiplied by 1,000, because we are going to assume that this is 1,000 shares right here. And actually, I almost have enough buying power to buy 1,000 shares of this, but we're not going to do this in this portfolio. But 1,000 shares, it's going to cost you $22,000. So let's see what's going to happen. So the interest rate, we're going to assume it's going to be around 1%, because annually it's 12%, and it's divided into the 12 months. So it's going to be around roughly 1% per month. And let's just assume our time frame is going to be 40 years, and we're going to be compounding it monthly. So every time we get paid a dividend, we're going to be reinvesting it back into this ETF, which is going to to start the snowballing effect. And once we click calculate, we're going to see some crazy numbers here. As we can see here, 2.69 million with just an initial balance of $22,000. So this is some insane returns, you guys. So based on this calculator, you guys can see that the interest earned just from the pure dividend reinvestments is going to be $2.6 million. So this is the power of compound interest, and time is on your side. As we can see, the time frame is 48 years. You just need to buy 1,000 shares of this ETF, and you're pretty much set for retirement if you so do so. But of course, not everyone has $22,000 right at the bat, so you can just buy whatever you can and continuously buy more and more shares of this ETF. So if we do regular deposits, so let's say we start off with $22,000 and then we add in, say, 100 shares every single month, which is going to be $22.68. Calculate this, we're going to see some insane numbers here. $29 million, assuming we start off with 1,000 shares and we buy 100 shares every month. Let's just start with 100 shares and then we'll add 100 shares every single month. We're going to be seeing some pretty insane numbers too. $26 million, because dividend reinvesting is very, very powerful, and this ETF pays out a pretty nice yield, 12% a year, which is 1% a month. And all you have to do is buy and hold this ETF, and the fund managers do all the covered call writing behind the scenes for you. So this does have an expense ratio. It's around 0.6, which is pretty low. It's not that high, so it's a pretty reasonable ETF. So this is just the fees that you pay the fund managers for managing this ETF, and this ETF is pretty safe because it has the top 100 stocks of the nasdaq 100 index. And if we go into the top 10 holdings, we can see solid companies, very big in the tech sector. Actually, they have Apple, Microsoft, Amazon, Google, Facebook, Tesla. They have Nvidia, PayPal, Adobe. So this has a ton of your favorite tech stocks bundled into one ETF, and it saves you a lot of the downside risks because it sells covered calls as often as it can, which prevents downside risk and creates a lot of passive income consistently every single month for you guys. So the downside to this ETF, obviously, it's going to be the capital appreciation. The stock does not move, which is good for both flat markets as well as bear markets, because we can see here from the coronavirus crash, it only dropped around $6 per share, which is not that much, and it's recovered pretty nicely ever since. So this is my take on this ETF. If you would like more videos like this, more strategies, this is a simple buy and hold strategy, mostly for people who are busy at work or school. Comment down below what your thoughts are, and of course subscribe if you're new to the channel. It helps out a lot. Thanks for watching.